Today we're talking about the latest in enterprise AI, where agent pilots nearly doubled last quarter. Welcome back to the AI Daily Brief. Today we are once again looking at some research around AI usage in the enterprise. And unlike some of the surveys that I've been complaining about recently, this data is actually pretty contemporary. So this, of course, is KPMG's quarterly AI Pulse survey. It's a longitudinal survey of about 130 executives at companies with $1 billion or more in revenue. So this represents sort of the upper echelon and upper size range of big enterprises. And again, is current data. They do this every quarter, so we're dealing with actual recency of information. And the story here is very clear. The results here show organizations that are moving from theory to practice in an increasingly urgent way, with the concerns and priorities following along. So to kick us off, let's talk about the first clear theme here, which is growth in the investment around and an increase in the usage of AI. In Q4, executives thought that they would spend $89 million on Gen AI over the next year, while by Q1, that number had gone up to $114 million. Even more dramatic is some of the increases in actual usage. Weekly usage of knowledge assistants jumped from 48% in Q4 to 61% in Q1. Gen AI usage embedded into existing workflows went from 24% to 35%. But the big one is daily usage of AI productivity tools significantly more than doubled from 22 to 58%. And to me, this does not read like some statistical outlier, even though that increase is fairly dramatic. I think that those of us, probably most of you who are listening, who have used these tools, find them very quickly making their way into your daily habits. I actually think that that 58% number just reflects the data catching up to how AI adoption is actually happening in practice. And I would expect to see it nothing but increase in the coming quarters. And so pursuant to all of this increase in usage, I think that the concerns that people have around AI are changing consequently as well. When it came to challenges with AI, the number one concern shifted from misuse of AI by bad actors to accuracy and fairness of AI outputs. The concern around accuracy of AI outputs jumped from 20% to 32%, and the concern around misuse of AI by bad actors went down from 50% to just 30%. A new category of concern, overregulation stifling innovation, jumped massively from just 2% in Q4 of last year to 17% in this study. So what are these numbers telling us? Well, frankly, these things all seem to me like a better calibration if we assume that people are actually using AI more. Why does the concern around accuracy increase the more that you use AI? Because the use cases that we're getting into are increasingly more important. The more that we're trusting AI to do things that are mission critical, the more that we need it to be accurate. Meanwhile, why would the concern around misuse go down? Well, misuse of AI by bad actors is a theoretical outside the organization concern rather than something that would be an issue day to day. And so it doesn't surprise me once again, the more that we're actually using AI to see that comparatively decrease and make way for concerns about things that are actually relevant for your business in the here and now. Likewise, this concern around overregulation stifling innovation, I think that increasingly organizations are making plans based on the rate of change, which has now been fairly consistent. Especially as agentic capabilities increase, people are starting to build plans around assuming updated capabilities in the months and years to come. And so exogenous factors that could slow those developments down once again become more important. Expectations of challenges once again reflects a very practical, we're actually doing this thing sort of point of view. 82% of the leaders surveyed said that they expected risk management such as data privacy and cybersecurity to be their biggest challenge for Gen AI strategy this year. Organizational data quality was second with 64%. Now, one of the areas with the most dramatic increase was the percentage of organizations piloting AI agents. Now, to KPMG, the pilot phase comes after the experimentation phase, so pilot is perhaps a little bit more high intent than the word might suggest in other contexts. The percentage of organizations piloting AI agents jumped from 37% in the last quarter of last year to 65% in the first quarter of this year, nearly doubling. Now, when it comes to full deployments, the number remained flat at just 11% in both of these quarters. But still, overall, that represents a dramatic move down the funnel towards full deployment. And again, that shows up in the intent. 99% of organizations surveyed said that they plan to deploy agents, suggesting to me that 1% of organizations misread the question. Interestingly, the buy-build spread kind of got back to something that we might expect, with 2/3 planning to buy a pre-built agent and a little less than a third at 27% planning on a combination of buying and building. We had seen some research towards the end of last year from Menlo's enterprise study that found a dramatic shift in behavior between 23 and 24. In 23, the divide between buy and build behavior was something like 80-20. Whereas in 2024, it was very nearly 50-50. I think it was 53% buy versus 47% build. And I had speculated at the time that I thought that probably reflected that organizations were discovering verticalized use cases that didn't really have a great startup yet, and that probably there would be a bit of a boomerang back as more startups focused on those specific niche areas came online. Although I will also note that when it comes to agents, the build-buy hierarchy is a little bit misleading given how much customization there is and given how blurry those lines actually are. Still, overall, the story is that AI agents are coming online, they're coming online fast, and that while full deployments are not here in general, we are cascading in that direction. Alongside that shift, the priorities of organizations are changing consequently as well. KPMG writes, when asked what risk mitigation measures are being considered when it comes to AI agents in the next 6 to 12 months, 63% of leaders plan to deploy AI agents developed by trusted tech partners, up from 23% in Q4, while another 52% are not allowing AI agents to access sensitive data without human oversight, up from 31% in Q4. Point being that in a world where more and more high-sensitive, highly important functions are being trusted to agents, and frankly in a world where software and capabilities are being increasingly commoditized, trust is something that is distinctly not commoditized and begins to matter even more than before. Finally, it's pretty clear that organizations are still in the mindset of augmentation of human labor rather than replacement of human labor. 57% surveyed said that they thought that AI will help low performers become stronger performers. 69% said that they thought it would help strong performers focus on more strategic work, i.e. take away tasks that are important but rote. And 76% relatedly said that they thought that AI would automate specific tasks but would not replace roles entirely. I tend to think that there's going to be more and more pressure to actually think in terms of job displacement, particularly if economic instability continues to increase. And so I'm very glad to see that organizations have such a strong starting point of this vision of AI augmenting what they do rather than replacing their existing teams. So summing up, like I said, I really think that this tells the story of enterprise AI usage that is maturing, moving farther from experimentation and towards deployment, where agents and use cases are increasing in significance, and both the concerns and priorities are changing because of that as well. I will include a link to this study so you can dig in more. For now, though, that is going to do it for today's AI Daily Brief. Appreciate you listening as always, and until next time, peace.